The global economy has been jolted by a new and unexpected shockwave, sending ripples through financial markets and boardrooms around the world. This week, a dramatic escalation in the U.S. China trade war has captured the world's attention, raising the stakes for businesses, governments, and ordinary people alike. In a bold move, China announced a sweeping ban on all U.S. crude oil imports, cutting off a major artery of global energy trade and sending shockwaves through the oil markets. The United States quickly retaliated, imposing strict new restrictions on the export of vital technology components to China, targeting the very heart of China's high-tech ambitions and future growth. These are not empty threats. These are real targeted actions with immediate and far-reaching global consequences, shaking investor confidence and sparking fears of a prolonged economic conflict. The oil ban alone threatens a multi-billion-dollar American industry, putting thousands of jobs at risk and potentially driving up energy prices for consumers worldwide. Meanwhile, the U.S. tech blockade strikes at the core of China's ambitions to become a global leader in innovation, disrupting supply chains and slowing the pace of technological advancement. Both sides are now locked in a high-stakes standoff, each betting the other will blink first, as the world watches this economic chess match unfold. Despite a temporary 90-day truce on broader tariffs, trust between the two superpowers is at an all-time low, and the risk of further escalation remains high. The targeted bans have poisoned the atmosphere, making compromise elusive and fueling uncertainty in global markets. The world is watching anxiously as rising fuel prices and supply chain disruptions ripple outwards, affecting everything from the cost of groceries to the availability of everyday goods. In this video, we'll break down the new trade actions, explore the history behind these escalating tensions, and examine the strategies both countries are using in this economic showdown. We'll also look at what these moves mean for people everywhere, from factory workers and business owners to families trying to make ends meet in an uncertain world. The U.S. China rivalry is no longer abstract. It's reshaping daily life across the globe, touching every corner of the world economy and influencing the future for us all. China's ban on U.S. oil is a seismic move in the ongoing trade war, sending shockwaves through global markets and signaling a dramatic escalation in economic hostilities. Beijing, once a top buyer of American crude, has abruptly cut off a market worth billions to U.S. producers. This sudden halt not only disrupts established trade flows but also leaves American exporters scrambling to adapt. Officially, China cites national security and the need for energy diversification. But beneath the surface, the real motive is clear. This is direct retaliation for U.S. technology restrictions and mounting political pressure. By turning to Russia, Saudi Arabia, and Africa for oil, China is not just finding new suppliers, it's actively reshaping global energy flows, forging new alliances, and sidelining the U.S. from a market it once dominated. For American energy companies, the loss is immediate and painful. Production cuts, job losses, and a glut of unsold oil threaten the industry's stability. Communities that depend on oil exports now face economic uncertainty. Finding new buyers for 500,000 barrels a day is a daunting task. The global oil market is already saturated and competition is fierce, making it difficult for U.S. producers to recover quickly. The move is a calculated show of strength, signaling China's willingness to endure economic pain in order to push back against U.S. pressure. It's a message to the world that China is prepared for a prolonged standoff. By framing the ban as a security measure, Beijing is aligning its economic and geopolitical strategies, rallying domestic support, and sending a warning to other trading partners. The message is unmistakable. Essential commodities like oil are now being wielded as weapons in this escalating conflict, raising the stakes for both sides. The oil embargo marks a new, more confrontational chapter in the trade war, one where economic leverage is used as a tool of geopolitical strategy. The era of one-sided pressure is over. Now, both nations are locked in a high-stakes contest, with the world watching to see who will blink first. The U.S. wasted no time in hitting back. Washington's new export restrictions target China's most sensitive sectors: advanced semiconductors, aerospace parts, and rare earth materials. The goal: slow China's tech rise and cripple its high-tech industries. China still depends on American chips and designs for its most advanced products. The blockade disrupts Chinese manufacturing, threatening everything from electronics to aircraft. It's a high-stakes gamble, hurting Chinese firms, but also costing U.S. companies access to a massive market. This tit-for-tat escalation is no longer about tariffs. It's about technological supremacy. Both sides are now targeting each other's core strengths, making a diplomatic solution harder to reach. The U.S. move is part of a broader strategy to contain China's tech ambitions. The trade war has shifted from broad tariffs to targeted strikes on critical industries. The battle lines are drawn around the technologies that will define the future. The stakes have never been higher. This crisis is the result of years of rising tension. It began with U.S. restrictions on China's access to advanced AI chips in early 2024, shifting the conflict from general trade to technology. China hit back with export controls on rare earths and graphite, disrupting Western supply chains. By spring 2025, threats of massive tariffs brought both sides to the brink of all-out trade war. Fragile talks in Geneva led to a temporary truce, but deep issues, technology transfer, market access, and a $300 billion U.S. trade deficit remained unresolved. The peace was short-lived. The August oil ban and U.S. tech blockade are the most severe escalation since the original 2018 to 2019 trade war. Unlike past broad tariffs, these are precise strikes at strategic sectors. Both sides are now preparing for a long, grinding confrontation. The path from chip restrictions to full-blown blockades has been rapid and dangerous. The future of global trade hangs in the balance. Rhetoric from both capitals has grown fierce. U.S. Trade Representative Katherine Tai called China's oil ban economic aggression, framing America's tech blockade as a necessary defense. Beijing accuses Washington of weaponizing trade and trying to stifle China's growth. Both sides are playing to domestic audiences, rallying support and justifying tough measures. Each claims to be acting defensively, deepening mistrust and making compromise harder. The war of words is fueling nationalism and preparing populations for a drawn-out conflict. The language is no longer about cooperation, but about zero-sum survival. This verbal escalation is closing off paths to peace. The trade war's shockwaves are rattling global markets. Oil prices spiked 4% after China's ban, fueling anxiety from boardrooms to gas stations. U.S. energy companies face layoffs and lost investments. Chinese tech firms scramble to replace critical U.S. components. Bilateral trade is plummeting. U.S. imports from China down 15%, exports down 20% in just 6 months. The bans accelerate economic decoupling, forcing companies to rethink supply chains and investments. The fallout isn't limited to the U.S. and China. Suppliers, allies, and developing nations are all caught in the crossfire. The conflict threatens the global trading system that has underpinned prosperity for decades. Uncertainty is now the new normal for businesses and consumers worldwide. The pain is real and it's spreading. Beyond the headlines, ordinary people are feeling the squeeze. In the U.S., higher fuel prices hit family budgets while layoffs loom in energy and tech sectors. Job insecurity is rising as companies freeze hiring or cut back. In China, factory workers face reduced hours or unemployment as supply chains break down. Higher prices and shortages are becoming common, fueling anxiety despite government messaging. The uncertainty is stalling investment and economic growth in both countries. For millions, the trade war means a less stable future and a higher cost of living. The superpower standoff is no longer distant. It's personal. The economic pain is hitting home. The world is watching for the next move in this high-stakes standoff. Every headline, every statement from officials, and every market fluctuation is being scrutinized for clues about what might come next. The uncertainty is palpable, and the stakes could not be higher. A 90-day truce pauses broader tariffs, but negotiations are tense and prospects for a breakthrough are slim. Both sides are digging in, with negotiators under immense pressure to deliver results. The world's two largest economies are locked in a delicate dance, where even a minor misstep could unravel months of progress. Russia is now a key player as China turns to Moscow for oil. This new alliance is shifting the balance of power, giving China alternative sources of energy and leverage in the ongoing talks. The ripple effects are being felt across global energy markets. An upcoming U.S.-Russia summit could reshape the conflict. Failure may trigger even tougher sanctions and a deeper crisis. The world is watching to see if diplomacy can prevail, or if the rift will widen, drawing in more countries and complicating the path to resolution. If talks collapse by November, both sides threaten massive tariffs that could trigger a global recession. Investors are bracing for volatility, and businesses worldwide are preparing for the worst-case scenario as supply chains and jobs hang in the balance. The nuclear option of all-out tariffs remains on the table, casting a long shadow over the talks. Such a move would send shockwaves through the global economy, affecting everything from consumer prices to international alliances. Further targeted strikes are possible. China could restrict rare earth exports. The U.S. could tighten tech bans. These measures would escalate the conflict beyond tariffs, impacting critical industries and technological innovation worldwide. The tit-for-tat escalation could drag on, with each side probing for weaknesses. This ongoing struggle is not just about economics, but about influence, security, and the future of global leadership. The next 3 months are a critical test of diplomacy and restraint. Every decision, every negotiation will be closely watched by allies and rivals alike as the world hopes for a peaceful resolution. A single miscalculation could have devastating global consequences. The interconnectedness of today's world means that no country is immune from the fallout. The stakes are enormous, and the world is holding its breath. Every nation, every market, and every citizen could be affected by what happens next. The outcome will shape the future of global trade, setting the tone for international relations and economic growth for years to come. The U.S. China trade war has pushed the world to a crossroads. This is no longer about tariffs. It's a struggle for economic and technological dominance. Short-term pain is clear volatile markets, disrupted supply chains, rising costs. Long-term, the conflict is accelerating the decoupling of the world's two largest economies. The era of seamless global integration may be ending, replaced by fragmented, costly trade blocs. For ordinary people, this means higher prices, less job security, and constant economic uncertainty. The temporary truce offers a slim hope for diplomacy, but deep mistrust lingers. Businesses and individuals must adapt to a new era of unpredictability. The rivalry between the U.S. and China is reshaping daily life everywhere. The need for clear-headed leadership and de-escalation has never been greater.